Property insurance is one of the most important things for real estate investors to understand, yet it's often overlooked. Having the right insurance coverage can mean the difference between protecting your investment or facing major financial losses. Today, we're going to talk about what real estate investors need to know about property insurance in 2024. We'll cover the basics, what's changing, and how to make sure your investment is properly protected. First, let's go over the basics. Property insurance for real estate investors is different from standard homeowners insurance. It's designed to cover rental properties, commercial properties, and multi-unit buildings. The key difference is that property insurance for investors takes into account the fact that these buildings are income-generating, and the risks are different from those of a personal residence. The main types of coverage you'll need to consider are dwelling coverage, liability coverage, and loss of income coverage. Dwelling coverage is what most people think of when they talk about property insurance. It covers the structure of the building itself, things like the roof, walls, and foundation, against risks like fire, storms, and vandalism. If your property is damaged by one of these covered risks, dwelling coverage will pay for repairs or rebuilding. It's important to get enough dwelling coverage to fully replace your property if it's destroyed. Next is liability coverage, which protects you if someone gets injured on your property and decides to sue you. As a landlord, you have a legal responsibility to keep your property safe for tenants and visitors. If someone slips on an icy walkway or gets hurt because of a maintenance issue, you could be held liable. Liability coverage helps cover legal fees and any damages you might be ordered to pay, so you're not paying out of pocket. Another important type of coverage for real estate investors is loss of income coverage, also called rent loss insurance. If your property is damaged and becomes uninhabitable, this coverage reimburses you for lost rental income while repairs are being made. This can be a lifesaver if you rely on rental income to cover your mortgage or other expenses. Without it, you could be stuck paying the mortgage on a damaged property without any rental income to offset the cost. Now let's talk about what's new in 2024. One big trend is that insurance companies are getting more strict about the types of risks they'll cover, especially when it comes to natural disasters. With climate change causing more frequent and severe storms, flooding, and wildfires, some insurance companies are raising premiums or excluding certain types of coverage altogether. For investors, this means it's more important than ever to read the fine print and understand exactly what your policy covers and what it doesn't. If your property is in an area prone to floods, for example, you may need to purchase a separate flood insurance policy, as most standard property insurance policies don't cover flood damage. The same goes for earthquake or wildfire coverage, depending on where your property is located. Make sure you're aware of any additional risks in your area and talk to your insurance provider about whether you need extra coverage. Another thing to keep in mind for 2024 is that property insurance premiums are likely to continue rising. With more frequent claims related to natural disasters and other risks, insurance companies are passing those costs on to property owners. As an investor, it's important to factor rising insurance costs into your budget and make sure your property is still cash flow positive after accounting for higher premiums. So, how do you make sure your property is properly insured? First, work with an insurance agent who understands the needs of real estate investors. Not all insurance agents are familiar with the specific risks and coverage needs of rental properties, so it's worth finding someone who specializes in this area. They can help you tailor your policy to make sure you have the right coverage at the best price. Second, regularly review your coverage. Your insurance needs may change over time, especially if you make upgrades to the property, take on new tenants, or expand your portfolio. Make it a habit to review your policy at least once a year to make sure you're fully covered. Finally, if managing insurance, repairs, and tenants feels like too much, hiring a property management company can make things easier. A company like Alpine Property Management Kansas City can take care of the day-to-day management of your property, including making sure your insurance coverage is up to date and handling any claims that come up. We also handle tenant screening, maintenance, and rent collection, so you can focus on growing your portfolio without worrying about the details. Now, switching gears for a moment, if you're thinking about selling a property, Alpine Property Management Kansas City also buys houses. Whether your property is occupied, in need of repairs, or ready to go, we offer a simple, no-hassle process. You won't have to deal with listing your property or waiting for buyers. We'll make you a fair offer and you can walk away with cash in hand. If you're ready to sell, reach out to us and let's talk. To sum it up, property insurance is a crucial part of protecting your real estate investment. In 2024, it's more important than ever to make sure you have the right coverage, especially with rising premiums and more frequent natural disasters. Make sure you understand your policy, work with an expert, and review your coverage regularly. And if you need help managing your property or navigating the complexities of insurance, Alpine Property Management Kansas City is here to help. If you found this video helpful, don't forget to like, share, and subscribe for more tips on real estate investing and property management. Thanks for watching.